Hi everyone, this is Rob Roy and welcome to Elliott Wave Options Lessons from the Market. What we do in the Lessons from the Market is try to explain things that even after, and I just celebrated 25 years of trading options and over 20 years of trading options full time. So with these anniversaries, a good level of experience. You can get education in a number of different places on the internet. There's no doubt about that. But there aren't that many people that have been trading full time for over 20 years. So that puts me in a kind of smaller category. But even with all that said, I still learn things from the market. So when we go through these examples of lessons from the market, what I'm trying to explain is things that I'm still learning. And I think that when you get to the point where you feel like you know everything and you can't learn anything more, you're setting yourself up for failure. So unless you're open to continuing to learn and experience in whatever field you're in, you're setting yourself up for failure. And I certainly don't want to do that. So one of the things that I really enjoy about trading is it is a learning experience. Every single day is a learning experience. So let's talk about something that happened recently that is a little bit against one of the common stereotypes regarding the market and see what we can learn from it. In this example, what we're going to talk about is the old adage that V bottoms never hold. That's a phrase, an expression that's been around a long time in the markets. And what we're talking about with a V bottom is really what occurred right here, where the market went down, made this low in December, and then immediately rebounded. And it formed a V, hence the name V bottoms. Well, for a long time, it's been viewed that a V bottom will not hold. In other words, what you need is a low, a bounce, and then you come back down. And you can come back down to just below the low, or right at the low, or just above the low, and then you get the rebound move back to the upside. But one of those things occur. You either come down just right near where the low was, exactly where the low was, or just below it, and then you rebound back to the upside. And that's a test of the low, and that's what holds. And a lot of people, including myself, are believers that that's what you need in order to have a good tradable bottom. Well, as you can see, we did have this V bottom here that occurred in December. Markets moving back to the upside. Had made some money sending out downside trades to our subscribers on this way down. You can see that we had this area here. We talked about this in some videos with this sideways consolidation known as a flat. Talked about that, actually posted it on YouTube, and then we broke that and moved to the downside, and everything was exactly as we thought it was going to be. And then we get this V bottom. So from this point in time, it's like, okay, we got this V bottom. We're right now at a wave 4 in the Elliott wave, 56% correction. We're right close to the 61.8% level, which to me is the most important Fibonacci level. Everything is great and set up for this forecast next move lower, where we were going to go make new lows. But one thing that I've tried to focus on and tried to educate our subscribers on is the fact that no one indicator is the holy grail. And as much as I believe in Elliott wave, and Elliott wave at this point in time was forecasting a new leg lower, you can't just simply rely on one indicator. You have to have a system. You have to have a tradable system, and I've created a system around Elliott wave. So looking at the fact that, hey, we're expected for this move to go lower, let's go through and look what happened to the market. So it looked like everything's good, and then all of a sudden we start to move higher. Now we're right there, 62% wave 4 correction, right at that Elliott wave 61.8% level. Beautiful. We're ready to go down, right? We're here, we're set, we're ready to go down and make the new low. But the market's had other ideas. And so the market continues to move to the upside. Now we're getting up close to 71%. We have violated the 61.8% level. It's not good anymore. So at this point in time, this potential wave 5 lower has been negated. And that's one thing that you have to be willing to do in trading is be dynamic. The markets are dynamic. You have to move with the markets. That's the beauty of Elliott wave is they are dynamic. They do move with the markets. So you have to be on top of that. So what we do is at this point in time, when we see this, is we add our other indicators. And one of my confirming indicators is the DMI. And the DMI was showing now at this point that we had big separation here between the green line and the red line. The green line represents buyers, the red line represents sellers, so the buyers are clearly in control. On top of that, we have the ADX moving above the level of 20. 25 is a touch more conservative, 20 is a good level, but you're above 25. So at this point in time, if you're looking at not just Elliott wave, but your system, you're thinking, hey, we're going higher. This is a disqualified wave 5 down. We're actually going to move to the upside. And had you stayed with your system, you would have been able to trade the fact that, hey, we're moving to the upside. So here we are, we're at an 82% level. And look where we have here with the separation again between the green and the red lines. Here the ADX has retraced just a touch, but we continue to move to the upside. ADX is back moving above the 20-25 level with the separation between the two directional indicators. There is nothing in this chart that's showing you that you should get out or you should not continue to be bullish. But as we continue to move to the upside, things change. Now we've had a crossover. This is key. Right here, we had a crossover where the positive directional indicator, the green line, dropped below the ADX. That tells you that the strongest part of the move was over. So back when we said that you should get in and be all into the bullish side, that the downside had been disqualified and that you should be bullish, now is the point that a bullish trade should be exited, because now you have the ADX crossing above the positive directional indicator. The strongest part of the move is over, so it's time to exit. And if we take that off now and look at where the market's gone, you can see moving forward that, yeah, we did move a little bit higher, but nobody gets in at the exact bottom and the exact top. If you're trying to do that, then you're not going to be very successful as a trader. What you want to do is capture a piece in the middle. Don't try to time the bottom. Don't try to time the top. Capture a piece in the middle, take your profit, be happy, and move on. That's what successful traders do. That's what full-time traders do, people that trade for a living. That's how they trade. So we came up here, and now we can see that we have this huge resistance level at the previous highs, and for the past quite a bit of time, that's acted as resistance. Then we came down and we had a beautiful zigzag pattern to the downside, just about as classic of a downward zigzag as you could ever possibly hope to achieve, with the A, B, and the C wave extension. You can take a look at our recordings or my recordings on the S&P 500. We're going to detail about that zigzag pattern, so I don't need to redo that here. But it was as classic as you can get, and now we're moving back up to test that resistance level. And here we are where we broke above that level, and now we have a great wave 4 correction level, and we have the opportunity to go up and make the new wave 5. In addition to that, we have several things going on. In that same scenario of recordings with the S&P 500, I mentioned that I just got a feeling that something is going to happen from a positive side. Trump's up for re-election. He's going to want to win with China. Now, whether or not it's a legit win or not, it's going to be publicized as a win. And that likely will help the markets in the fact that if he reduces tariffs, we have the potential to move higher. In addition to that, one of the things that I've talked about is there has been very little in this entire move to the upside. There has been very little participation from retail traders. It's been mostly institutions. Well, institutions need the retail traders in order to make money. So it's been my feeling for a very long time that we need to go up, make new highs, to bring in the retail traders, because that'll be broadcast through all the media outlets. Bring in the retail traders. Now the smart money has an opportunity to sell into the retail traders, make their money, get out. Then we can have a more meaningful correction. So I think we're setting up for that scenario now. We'll see how it plays out. But at this point in time, it looks pretty good. The news from the weekend has been pretty much as expected, that President Trump is saying, hey, we're going to hold off on the tariffs, had a good meeting with President Xi of China, and we're going to continue the talks. Maybe we'll come up with a trade agreement down the road. But it seems like that would be enough in order to propel the markets higher. Now, we'll see. We'll see how that plays out. But you have to follow your charts. You have to follow your indicators. And that's all we've been doing. So the whole scenario of V bottoms never hold, nothing is 100%. Nothing is true. Nothing is etched in stone. You have to be dynamic in the world of trading. If you're a static trader, if you follow old stereotypes, if you follow just simple old rules and adages, you're going to get run over at some point in time. Maybe you do well for a while, but eventually the unusual scenario is going to come to play, and that's going to hurt you. And I do know a lot of people that have been bearish ever since this low, because of the fact that we didn't have a test to that low, that we had a V bottom, and they've been feeling an awful lot of pain for an awful lot of time. If you don't have a system that allows you to be dynamic and move with the market, you're probably not going to survive very long. So lessons from the market, nothing's 100%. V bottoms, old adage, V bottoms never hold. In this case, they did. Take care, everybody.